Hi, I'm David, and I'm here to talk to you about Bitcoin price analysis for Thursday, February 7th, 2019. Today I'll be taking a deeper dive into Q1 price action for Bitcoin over the last 6 years, seeing if there's any general trends that emerge, and if so, could we apply them to today to maybe get some ideas about where the price is going. Normally I use Coinbase for my charts, but today I'll be using Bitfinex as it's been around longer and has price action data going back further. So, without further ado, don't forget to like and subscribe below if you haven't already, and let's get started. So here we see Q1 of 2018. I have each month kind of nicely marked with these green lines just to make it visually pretty easy to see. So let's take a look at what patterns we see here. Obviously, it's no big surprise to anybody that we started 2018 in a bit of the beginning of the bear run. Right after the new year, we can see a bit of a spike right here, followed by what ended up being a rough rest of the month, a rough January. That carried on into February. But then February saw this nice little rally, which leveled off a bit and brought us into March. And then March took back pretty much all the gains we saw in February, ending the first quarter lower notably than we had started it. And that's not surprising in the midst of a bear run. So let's keep these basic patterns in mind. A spike right after the new year, a rough rest of the January, a rally in February, but those gains are lost in March, and ending the first quarter lower than we started it on. Keep that in mind. Now let's look at 2017. Here's 2017. And right off the bat, now we can see we were coming into 2017 on much more of a bull run. But still, we saw a very pronounced spike right at the beginning here, followed by, although a less severe drop-off, still a pretty rough rest of the January. It had a dip right after the spike and then just never really recovered. Moving into February, we definitely saw more of a rally, though there was still a spike a dip near the beginning of the month, but then a strong February. But again, March ended up taking back most of those gains. And actually, in this case, we ended the first quarter just a little above where it started. It ended at 1,041. We had begun that quarter at 966, so less than $100 difference. Pretty much the same, but up slightly. Now we're looking at 2016. And heading into 2016, we were already on a bit of a bull run right here, but that had tapered off to sort of sideways action. And sure enough, in the first week after the new year, we do see a spike, though not as pronounced, followed by a pretty good dip and a generally rough rest of the month again. Now we come into February, there is a tendency here for this little hiccup in the beginning of the month, but then sure enough, it rallies for most of the rest of the month, ending pretty strong. Going into March, we see a dip, not as bad of a sell-off here, but we still go back on a lot of the gains from February. And we end the month again, pretty close to where we started, this time with a slight downward tendency. 413 we ended the quarter, and we started the quarter at 429. So kind of like 2017, almost in the same place, although this time technically down a little bit. Okay, here's 2015. Now it's pretty obvious we were coming into 2015 on a pretty sincere bear market, as you can see. We don't really get a rally, we get a pretty big dip right at the beginning of the year. However, you could argue that maybe this attempt at pulling back out of that dip was our New Year's rally, basically, but in such an intense bear market, there wasn't anything it could do. We see continued sell-off. Another attempt at a rally as the month went on, but the month ended pretty poorly, as you can see. February doesn't have as much upside, but we do start to turn that around and go back up. And March is a little bit more even here. It spends about half the month going up and the rest going back down, but still taking back much of what it gained. And here we definitely end the quarter on the low end. We end at 247. We started the quarter at about 322, a more pronounced drop than this quarter. And the last year we're looking at is 2014. Now, 2014, we had just seen a recent all-time high. We were coming off of that and entering into a general bear market. But actually heading into the first of the year, we were tending upwards, and we saw that really accelerate right after the January 1st. We saw a nice spike again right here. That led to a general tapering off for the rest of the month. And aberrant to most of the months or the quarter ones we've looked at, February was just pretty much all downside here. There was no real rally in February at all. March attempted a rally and then lost all of it and then some more. And once again, we've ended our first quarter lower here. We are at ending the quarter one at 460. We started it back up at 737. So what are the basic trends we've noticed? I know that none of these held up for all the years we looked at, but there is a tendency for a spike at the beginning of the year, right after January 1st. There's a tendency for that to turn into a rough January. Usually we see a rally in February, though that's not shown here in 2014. And then March often takes back a lot of the February gains, and we usually end the first quarter at about the same level or a bit below than where we started it. So let's take this and look at the current charts. Okay, 2019 up through today. Now we began 2019 here, you can see. Heading into the year, we had recently had a dip in November, a pretty big dip. We had leveled off a bit and we're kind of heading sideways, but sure enough, though it wasn't that pronounced, we see a bit of a spike right after the beginning of the year, first few days, followed by basically a January filled with sell side action. Now we're just going into February. It's been the first few days of the month, so it's too early to say much. We see that there's a little bit of a dip happening. A lot of the other years started February with a bit of a dip. Now from here on out, everything I say is, of course, if these general trends happen again this year, then maybe this is what will happen. First off, this dip might very well not be over. We could easily go back down to this level here, about 3,200 or so. It was a recent low. If that does become the bottom and we do start to see movement back up, then we're probably looking at something like about 3,800, or if we're really lucky, about 42 to 4230. These are recent levels of resistance we've seen. And based on previous years, I wouldn't expect anything really higher than this, the 4230 level. Now, keep in mind, even if that does happen, March often takes back the gains from February. So we could see another sell-off in March, bringing us back down to, as we've observed, most quarter ones end at or below, around or below where they started. So if March does go that way, we could expect to see an end of quarter one at or below 38.32, which is where 2019 began. It's not a guarantee. Any major news, positive or negative, could completely change this assessment. But if the same pattern holds for the last 5 years or so, then it's unlikely we'd be significantly higher than the 38.32 level that we entered quarter one on. Well, that should about do it for me this week. As I always say, and it's even more true this time, this is not investment advice. These are just some observations I've made. Go do your own research. Go make your own decisions. Until next time, don't forget that like and subscribe. Good luck with your trading.